delighted to introduce Vibhor Narang, Executive Director, Structured Solutions for the UK and Europe at Standard Chartered. And our subject is AI-powered predictive analysis and next-gen automation in corporate banking. A warm welcome to the stage for Vibhor, please.
Thank you. Well, thank you to the organizers, and I generally like being the last speaker of the day because they generally get the biggest applause. It's not just that you understand each and everything what I'm going to say, but it's about a relief that yes, finally it's over. We are going. I'll keep it as light as possible. The topic looks pretty heavy on that, and there's a reason why I chose corporate banking. But before that, let me introduce myself. My name is Vibhor Narang. I head the structured solutions cash management for Europe for Standard Chartered Bank. What my team does is it's technically the treasury advisory piece. So when the large corporates come to our bank and they ask about various challenges across their cash management, transaction banking space, we actually create solutions for them. Now, at times, these solutions may not be possible just in the remit of a particular bank like us, and it applies to any bank in the industry. We do need support from FinTechs, who can come in and be part of some, part of that particular chain or solution, who can actually give a solution to the client. So my role is also to lead the co-creation in Europe, which is effectively the innovation part of it. Now, why corporate management and AI and FinTechs? Now, these three things just keep in mind when I speak for the next 20 minutes or so. My 2 cents, there has been a lot of work from an AI and of late Gen AI perspective in the retail banking space. So if you see onboarding, various chatbots on the client servicing, as well as customization of various products and services. Corporate banking may be offering a 10x more potential, but it is still starting. More reason being that it's a bit more complicated and a bit more regulated, and also it takes time for any change to come and get effected in. And also it is complicated from a customer point of view. You click a button and within 7 days you can actually change your bank, but if you are a large corporate, it's not going to be that easy. And at times you keep on, getting along with a half-baked solution or a semi-efficient service because you can't just switch on so easily to the other corporate. And that's what my team does in terms of providing a foolproof end-to-end solution. And what my message to this audience, and particularly the fintechs around, is that this is the best time, in fact, to shake hands with the banks and also to create, just to keep my compliance friends happy, I have to put that disclaimer. I don't even know what exactly is written there. So what exactly we are doing here is to create an ecosystem where banks, fintechs, regulators, and customers can come together to make really, really important solutions which can help them. And ultimately, it goes to the final customers. I'm glad to see that the regulators are now catching up very, very quickly, with the innovations, and we talk about AIs and the Gen AIs, and the regulators are quite opening up. So that's something that I can see now. Now, just to give you a perspective and how slow a corporate banking can be at times when it comes to solutions, we are still very dependent when it comes to analytics. Now, there can be multiple subject areas that I can talk about. I picked up analytics because that's extremely important to bring in the efficiency when it comes to the corporate treasury and the management. When it comes to the analytics piece, it is mostly still, we are still living in the Excel sheet era. No surprises, and we are still dependent too much on the retrospective analysis. So whatever has happened in the past as trends, we just take care of that. We just take in the calculation and try to predict a future outcome, which is almost every time is flawed. Then there's a problem of siloed and fragmented data. Different departments do not talk to each other. Corporates keep on acquiring new smaller companies as such. They keep going into new jurisdictions, get on with the new systems, and these systems do not talk to each other. And the third thing is the limited scenario planning. If somebody in a treasury department will think about various risk management, okay, what worse can happen in my, in my remit, there is always a finite number of probabilities that a person can think about. And that is where the generative AI or the newer technologies can come and really make a difference. Now, fast forward, I would say, to 2026 or 27. What I predict is, and I can see things happening in this particular space, is on the scenario building side, on the risk management, where a treasurer can think about, okay, what can go wrong if that can go wrong? There can be infinite number of scenarios that these systems can build in. I don't know what I don't know. Is that particular bracket is becoming smaller and smaller. So if somebody can give you like hundreds and thousands of scenarios, particularly about the black swan events, where suddenly a catastrophic change happens, you actually are better prepared for that. Then the systems are becoming smarter and smarter. They are able to predict the risk identification 30 to 60 days in advance, whether the customer will be able to pay that amount or not, is something that is now becoming a reality. And this is based on various trends, market information, how the customer is doing. They even go to the LinkedIn, etc., and figure out that, yes, there might be a problem. And on the positive side, yes, this is a really great party which keeps on paying us, so just give them some discounts. And another important piece is, and this can be a real game changer, where generative AI actually can come and completely destroy the data silos. What it means is, if there are two different departments with two different technologies, you can actually make a thin layer in those systems, and they can talk to each other. Because these are basis large language models. It is just like I speak English, somebody else speaks French. He doesn't know English and I don't know French, but we can still converse with each other. That precisely is the technology which is coming in, and that will actually change the game when it comes to the corporate banking. Now, there can be quite a few areas which we can think about. But these are some of the top areas which I keep talking to various corporates, go to various conferences, speak about. And these are the 4 or 5 areas where I see that, yes, these are some of the more popular problem statements when it comes to the corporate banking. European Association of Corporate Treasurers, it's a very, very respected corporate body. They annually do a survey in like all the top European corporates. For the last 5 to 7 years, one of the biggest headaches of corporate banking or the treasurers is about forecasting. Cash flow forecasting is something that they are absolutely not able to crack. Even if you do a lot of advancement in this area, this remains a problem. I'll speak more about the cash flow forecasting in the next slide. Then there is a predictive liquidity management. Now, what is liquidity management? As a corporate banker or a finance manager, I need to have the right kind of money in the right currency at the right time available to me when I want. It should not be less, because then there is a risk of insolvency. It should not be more, because unnecessarily I'm blocking a lot of liquidity and I'm not investing it somewhere to get a better quality return. So I should have the optimum level of liquidity. And what is that? It's something people are not able to crack. As of now, 40% of the cash is parked unnecessarily, while with these technologies, if that can be deployed, it can come down to 5%. And I'm not talking about a retail customer. I'm talking about a large corporate, any big brand that you can think about. I'm talking about billions of dollars here. So imagine that's how the game changer can happen. Then we go to a similar problem of FX exposure analysis. Now, what is FX exposure analysis? I have to pay a particular amount of money to someone in a particular currency after certain period of time. Whether I am able to hedge that or risk manage it, it's important that if I am able to better properly hedge it, then it will take care of itself. Otherwise, there can be losses. Now, I have purposefully put these 3 points on the top row, because there is a lot of work going on in this area, and these are more near-term solutions that I can think about. There is a lot of work which is happening on the forecasting as well. Now, there are 2 things which are on the bottom row, which is counterparty risk assessment and interest rate movement. These, as of now, looks pretty medium to long term. Reason being, and what is counterparty risk assessment is that when I deal with a third party as a corporate, it can be a customer, it can be a supplier, it can be anybody outside my organization. So that is called third party. Now, if I deal with them and to assess a risk attached to that particular entity, I need to rely a lot on the external data. And my systems are not educated enough to pick up what is good news versus bad news. So I don't know which one to pick and which one not to pick, which one to believe, not to believe. So there's always a mismatch, and system will either create some biases or hallucinations just to give me the responses. So that's where it is slightly more midterm. And same thing applies to the interest rate movement. I don't know when the Bank of England will cut its rate. I can only predict, but sometimes it happens that it doesn't. So I need to actually go back to the last 20, 25 years, see all the speeches, see that whether what is the economic cycle, when they have made changes to their rates, etc. So that is a very complicated process. So it's still taking a lot of time there to actually work on that. And that is where we come to the biggest problem which the corporates do face. And if as a fintech you're able to solve for it, sky is the limit. Cash flow forecasting. Now, why cash flow forecasting? Again, as I explained you that I want to have a particular amount of cash at a particular time in a particular currency which is easily available to me when I want. As simple as that. And as I also told you that there is a lot of cash which the treasurers keep aside, which is 40% and ideal case is 5%. Now, the problem with cash flow forecasting is that right now, if you just see, there are lots of good models already available which can actually calculate what is the ultimate forecasting that I have. Like, I will have a particular amount of cash at this particular time. But then what they can't do is the first part of it in terms of gathering the data from this large organization. So that, imagine an organization which is like in 50, 60 different countries, more than that. They have got like say 6,000, 7,000 bank accounts, 150, 200 different entities. Getting a data from that humongous organization is next to impossible. And then also cash flow forecasting is dependent upon getting the data from various different departments. So you also work for various different companies, and getting a data from a different team at a particular time sometimes becomes a nightmare. And this happens in the corporate world as well, with the large corporates as you talk about. So that is where this whole problem comes in. And also the quality of data is always a challenge, because if you want in a particular format, you may not get it. After generative AI coming in, which is based on the large language model, this actually has solved itself to a very great extent. What generative AI will do, it's not going to calculate what is 2 plus 2 is equal to 4, but it will actually put the right number in the right place in the mathematical equation. These are based on large language models. So this is basically designed to actually create a sentence, which word will come after what word. So they are effectively, I'm not talking about the latest ones, and this differentiation is now coming down a bit, where they are still able to do more complex mathematical problems. They are able to solve for it. But generally, they are only able to keep the right number at the right place, so that you apply a simple mathematical formula and they will calculate it. So how we see it, divide it in part A and part B. Part A is actually you gather the data from various parts of the organization, and part B is simply apply a simple mathematical equation to calculate that. With generative AI, we are now able to solve for that part A. And this effectively, this slide is saying. So how, and that's still, it's a huge area for the corporates to build and develop. Yep. Now, before I move on to the final topics, in terms of what is the next generation treasury management or the next generation corporate banking looks like. And these are some of the areas where there can be a lot of work that can be done. For the fintechs, this is the right time to get into this particular segment while focusing towards the more corporate solutions. How to get that? I can see that there is a lot of acceptance in the large corporates now while they can actually work and deal with the fintechs directly. 10 years back, when I was doing a similar job, and they would have asked a bank to come in between. They say that, no, we will deal with you. You do whatever at your end, you deal with the fintech or you build your solution whichever way, we don't care. So the counterparty risk was always on the bank. Now, if you see many examples where large corporates are now opened up to work with the fintechs. And fintechs have also built a lot of risk management in their thought process and in their solution. So that is a very big change that has happened. So that is a big advantage or opportunity when it comes to fintechs. Second biggest thing which has happened is in terms of the quality of data. There are two big initiatives right now going on in the industry. One is around the implementation of ISO. ISO is International Standards Organization. It is nothing but that we actually, when we transfer the payments from one point to the other, it's a particular format in which you need to actually write all the details and execute that particular payment. ISO is so big as compared to what is there right now, which is the Swift messages, MT as we call it. It is 10 times bigger than the messaging format which is being used right now. So you effectively can send a Harry Potter novel to the next person on through this payment system. What I am alluding to is that the quantity of data which can be transferred without truncation or without slippage in the clearing systems from one point to the other is all-time high. So that is one point. The other point is the use of APIs in terms of if I get data from one part of the organization, how quickly I get it is the real-time data that I can get it. So the quality and the speed, these two are fundamental blocks when it comes to building any solution which is based on artificial intelligence. So that is another big advantage right now in the industry where fintechs can come and and build their solution on top of it, because the quality of the data and the timeliness of the data is all-time high. The third important thing is regulators are now opening up. Regulators are not averse of the idea if the corporate is directly dealing with the fintech, particularly when the fintechs have built up their own risk management systems. So that's another huge advantage which has come in. One thing that needs to be taken care of, and there has been many examples, is around cyber security. Recently, like 2 days back, JLR was in the news. Earlier this year, we had news about M&S, about cooperative, where the shelves were empty for a long period of time. And that's where cyber security becomes important. More you move towards digitalization or digitization, that is where you need to take care of the cyber security part of it. But once that is taken care of, there can be huge opportunity when it comes to the fintechs to get into the corporate sector. Now, clearly, I want to leave you with the message of one is the hyper automation of the routine task. That is something which is very important for treasurers because they are looking to only do the strategic piece or the exception piece. The day-to-day pieces of work can be hyper-automated. We call it something like a programmable payment, where we can actually execute a payment automatically basis certain conditions are fulfilled. So it's all there, it's real right now. So that's where we are moving towards. Predictive decision making, we have spoken a lot. Two most important things that I want to leave you with. One is about the risk mitigation and compliance. Like the scenarios example which I gave you earlier, risk mitigation, or when we actually do the screening and AML, money laundering monitoring in our systems, there is a lot of artificial intelligence related advantage that can come in, which can actually reduce all the false matches. So if you take a particular name which has been largely associated with some unwanted organization, it's highly likely in the systems it will always pick up and it will stop the payment. But with the use of artificial intelligence, it will know that yes, this is not a party which needs to be stopped, the payment should go. $35 billion are lost every year because the end payment do not reach on time. That's a huge number. And this piece can actually solve for that. Finally, is the talent transformation. Now, in a city like London, you have got some really good brains when it comes to the corporate banking, treasury management. We have got some really good brains when it comes to data analytics, data sciences, and the newer generation. I was in a King's College event yesterday evening and people were talking about data sciences and they were asking me questions which were like absolutely Greek to me. The talent or the requirement of the industry is that people should know both sides. So if there's a data scientist who knows the treasury side of it, or treasurers or the senior corporate bankers like myself are now training ourselves on the data sciences side of things, that is where there's still a huge gap when it comes to talent transformation. So summary, and what I want to leave you with that, there are some very solid use cases for the fintech firms, particularly in the field of generative AI in the corporate banking. This particular concept have already done wonders in the retail banking, in the service industry we are seeing, but corporate banking actually offers a much bigger landscape where, and it is relatively untapped. This is the right time where fintechs actually, from their innovation and speed, collaborate with banks from their scale and risk management and create some really, really good solutions. Together, we trigger a tectonic shift, as I say, and this is the title of my presentation, which is called Treasury Metamorphosis in this particular industry. Thank you, and happy to take questions.
Thank you very much indeed. Do we have any immediate questions from the room? I know I've got my own questions. Looking through the stage lights. Right, the key question I have is you said there that the sky is the limit in certain areas. I'm going to put you on the spot. What are the biggest opportunities for an innovative fintech that's got the right ideas, that can be agile? What are the big challenges you feel are still there to be solved, or the areas with the greatest opportunity?
So areas of greatest opportunity is anything and everything which is related to data management. In the past 3 to 5 years, I have seen that most of the corporates, the largest names in the industry, have, particularly after COVID, has gone through digital transformation in some scale or the other. Now the corporates are having actually, there's a lot of data at their end, but they don't know what to do with that. And that is where fintechs can come and change the game while they actually do an advisory service that what exactly you can do with that data and effectively give a solution which can be like the examples that I gave, something around that. But something more immediate and the challenge that you said, focus more on the processes. For example, document management. Which are basis on the large language model, mainly the language-based things rather than the calculation-based things, which are more mathematical stuff. Something very immediate, for example, there's a lot of documents generated for reporting, for KYC, etc. That is something that can be picked up and immediately automated. Few other areas, something related around this as well. Yeah.
Well, I think that is a fine place to round things up, a ending filled with opportunities. So appreciation from the room, please. From Standard Chartered, Vibhor Narang.
Thank you.
And that, as they say, is that. Full credit to everyone here who stuck it out to the very end. I'm very, very grateful for joining us here today. A couple of quick thank yous from me to our wonderful production and technical teams who've done a wonderful job over the last 2 days. Everyone here from Convene who's looked after us so well. The incredibly hardworking events team from BizClick who make all of this happen. A huge thank you to all of you for your good humour, your company and your questions over the last 2 days. So if you've enjoyed things here on Stage 1 over the last 2 days, do tag us, FinTech Live or FinTech Magazine. If you've enjoyed it, do tag myself, Neil Perry. If you've not, my name is Tim Curtis, who's been on Stage 2. It's an old one, that, and I'm fairly sure he's not on LinkedIn. He's far too cool for that. So you wouldn't find him anyway. Anyway, thank you so much for joining us and have a very safe trip home. Thank you.